What's going on, everyone? Joe Rapisarda here, reporting to you from the bunker today. Today is March 13th, 2020, giving you guys a quick market update from our last Facebook Live session yesterday. Also going to answer some questions that some of you had. First, we will go through some Q&A from yesterday, and then I'll just give a recap of what happened in the markets after we got off our FaceTime Live yesterday, and then also give you some updates on the most recent news and going into next week, what you can expect and how you can prepare financially to help preserve your wealth. Okay, great. So turning back to yesterday's questions, one of the questions from Shahan, he asked, you also said that you expect the market to continue to decrease. So how do you feel about put options? Shahan, I think put options are a good idea if the market's going down. That's exactly what a put option's for. You are betting that the market's going to go down, and you are reserving the right to purchase a stock at a higher price. So when the price goes down, you can utilize that put option, and then you can profit from it. I myself have had some put options out over the last couple weeks here. Unfortunately, I missed a great call on McDonald's, Facebook, and Apple, I believe, that was placed on February 25th. A few traders that I follow had put some put options out on the 25th of February, just before the market tanked, which those are up thousands of percent now. Hey, Auntie Kathy, love you too. Good to see you. Going forward, put options are a good bet if you think that the market's going to continue to go down. Obviously, with options trading, you want to make sure that you're caught up and you know what you're doing, because you're using leverage. So it can be a little bit more risky, but in a recession, you want to bet against the market. There's money to be made on the way down. There's money to be made on the way up. Second question from Shahan. Hey, Joe, how do you think this will affect small businesses? We have to think about it from a logical perspective here. If people are going to be staying home and kids are going to be staying home and flights aren't going to be flying anywhere, and people aren't going to be going out, they're not going to be spending, small businesses are going to probably be severely affected. That's one of the things that we're seeing right now from the Italian government, and then also we've heard from the U.S. government now. They're stepping in to try to support the small businesses and entrepreneurs by giving them tax cuts, by telling them they don't have to pay back, mortgage payments or rent payments. So I think the U.S. government right now is trying to scramble to figure out how to support the small businesses. My cousin's in the restaurant industry down in Florida, and we talked about this yesterday on the phone. One of the restaurants that he works for, had experienced millions of dollars in losses in 1 week just because people weren't coming to the restaurant. So, I'm expecting that it's going to severely affect small businesses. That's one of the worries here with the economy, is that, we're in a unique situation where consumption of goods will slow down because people aren't purchasing because they're home. And, especially if they're laid off from a job, they're not going to be buying. But also productivity slows down because people aren't at work working. They're not being productive. So, this is a very interesting phase we're in, and it has the potential to turn the other way, right? Because if no one's producing goods and no one's consuming goods, then the economy in itself stops. That's not something that we want. So the U.S. government's doing everything they can right now to try to help the small businesses. Eric Burmeister, what's your opinion on apps like Robinhood and others for beginning buying/trading stock? I love Robinhood. I personally use Robinhood. Robinhood is an app, for those that don't know, that you can download onto your cell phone. One of the things I like about Robinhood is there's zero commissions, so you're not paying a commission on trades. I've had a TD Ameritrade account where I've had to pay a commission on every trade. So every time you place a trade, there's a fee that you have to pay to the actual company. Robinhood doesn't take any fees. So they have a nice little elegant user interface. It's very easy to understand. Going back to Shahan's questions, I trade options on Robinhood as well. You can get yourself validated very easily on that account, and then you can trade options on it as well. So I support Robinhood, and a lot of millennials are using it. Matter of fact, on Robinhood, you can also purchase Bitcoin as well and cryptocurrencies. Same thing with Cash App. And we'll get into that a little bit later on where those went yesterday as well. Okay, Shahan, again, last one. You also talked about investing into bonds with interest rates close to zero and it being considered safe. Would you also consider removing all investments from the market and holding them for an upturn? Well, I think this is right. You typically would like to do this before the market crashes 25% because, then at that point, when the market's crashing like it did yesterday and like it has been over the past week, what people are doing is they're capitulating. They're selling everything they can because of emotion, fear, and then also some of the larger firms need to actually have cash on hand to service other obligations like debt payments that they have and things like that. So, if your investments are already, your 401k is already in there and you can't, you don't have the ability to go in on the computer and, maybe reallocate into bonds or something like that, then you're gonna sit it out. But we don't know what's going to happen going forward, and I'm not an advisor anyways. I can't advise you on that. But what I can say is that if you think that the markets are going to continue to go down, and we know that here in America we haven't seen the full extent of the slowdown in the economy yet, so there is always the potential for that. Yeah, I'd consider moving your assets into something more safe haven like bonds. We've talked about metals here. I think gold is a great play in this environment. Silver is a great play in this environment. I've supported Bitcoin specifically in this environment, even though we had a large reduction yesterday in crypto. But I think going forward over the future, these assets are going to probably do a lot better than stocks will. So you can take that for what it is. And bonds, again, even with the 0%, a bond that is at 0% interest rate, I mean, think about it. You could put $1,000 in, you can invest $1,000 into a zero interest rate bond, and that your $1,000 is still going to be there years from now versus having money in the stock market. And then if it tanks another 10%, then you actually lose on that. All right, great. So that's all the questions that I had for today. If you guys like if you guys like what I'm doing here with Q&A, feel free to put more questions in the comments. I will do my best to answer them to the best of my ability and the best of my knowledge. One of the reasons why I've actually come out and started talking over the last really 2 months or so is because, I have been following this current situation, the market, since 2 years ago. Ever since the coronavirus hit and, ever since we started seeing the economy start to slow down in China about a month or two ago, I started thinking that this was going to become very real very quickly. One of the videos that I posted in the notes section here was a video that I actually posted last Sunday on YouTube, calling out to all retirees coming into this week because, after last week's environment and after last week's conditions in the stock market, I didn't think this week was going to be any better. So I was just trying to put a word out to those, last week to kind of prepare for what was coming this week. And as we'll talk about now, this week we've had the worst, the worst market since 1987. So we'll get into it. So what happened yesterday after our call? The Dow opened, I believe, yesterday 1,300 points down. We've talked about that. And this is an article that I have in front of me from CNBC. It was written on Wednesday, March 11th at 6:06 p.m. Dow plunges 10% amid coronavirus fears for its worst day since the 1987 market crash. So last week we had the worst week in the market since the 07-08 housing crisis, which was the worst during our time period. This week, unfortunately, the turmoil continued, and we've now experienced the worst crash since 1987. And that's really the next one after 1987 is the 1929 Great Depression, which we all know about. Not saying we're entering there. I'm just trying to put it into perspective on how bad this last week really was in the economy. I don't need to tell you that. I'm sure a lot of you already know this. Yesterday was a bloodbath. I was jaw dropped the entire time watching the markets completely free fall. The Dow closed, down 10%, down 2,300 points. We've never seen that before. And on top of that, the cryptocurrencies also took a massive hit. Bitcoin dropped 48%, I believe, 47%. The entire cryptocurrency market in it. Gold actually as well dropped, I think, 4+%. And this is to be expected, though. When there's a market sell-off like what happened yesterday, everything sells off. everything sells off. People are looking for any type of safe haven they can. They want to get into cash. And this is what happens. We try to prepare for it before it happens, because when it does happen, it happens very quickly, like it did, and then it's typically too late. But now we can kind of look at this as past history and then prepare for tomorrow. There was also another very significant event that happened yesterday that wasn't really brought up. Well, it was brought up, but it was significant because of the reaction from the markets. So the Federal Reserve yesterday jumped in around, I think, 11 o'clock and announced an emergency announcement that they were going to start injecting $1.5 trillion into the economy, from what they're saying is to prevent unusual disruptions in the markets. So what's really going on here is, right, the Federal Reserve's a private bank, right? They loan to the U.S. Treasury, the Treasury Department, the U.S. government. That's why when you hear about our national debt, what that really means is that we owe the Federal Reserve Bank a certain amount of money. We're indebted to them by a certain amount of money. And their policy is to control, they control monetary policy. So what the Fed is doing is they're stepping in and they're trying to provide more money into the system to help kind of recover it, because banks need money, businesses need money. We've talked in the past that they're over indebted. They have a lot of debt right now, and they're not able to service that debt and pay it back. So this was important yesterday, because typically when the Fed does this, the markets rebound, right? Because they know that the Federal Reserve's coming in, there's going to be more liquidity, but that didn't happen yesterday. We continued to actually plunge down. So this was significant. Also, the Fed announced that, and this is an article from Market Watch published on March 12th at 2:32 p.m. The Fed was saying that Fed seen cutting interest rates to 0% soon in bid to help weather coronavirus storm. This is serious. And this isn't the first time you're going to hear me talk about this. I've talked about negative interest rates for quite a while. United States is the last country in the world really right now that has positive interest rates. So when the Federal Reserve pushes the interest rate to zero, that means that, when you take out a loan, when banks take out loans, the Fed funds rate, what they're talking about, the interest rate here, really dictates the interest on that loan. And loans are now coming back down to zero. Once we go negative, once the U.S. starts entering negative interest rate territory, the game really changes on this whole financial system. And a lot of people think this is when we're going to start to see the potential of a transition to a new form of financial structure and financial system. Reason being is that when you have negative interest rates, it incentivizes borrowing and it punishes savings. So let me give you an example. Right now in Italy, they have negative interest rates. They've had negative interest rates for quite a while now, I believe, definitely a couple months, over a year potentially. But if you are someone that has your money at a bank in Italy right now, primarily they're starting with the actual security boxes, savings boxes, I forget the term, but you pay them a fee. Every year you pay them a fee. So instead of you seeing on your Bank of America statement that you're getting that 0.002% interest, you're actually paying the bank a fee. And that's exactly what will continue to happen with negative interest rates. It's actually wealth confiscation. So if you're a saver and you have money in a bank, in the future, you'll have less money because you'll be paying the bank fees to keep your money there. Now, on the flip side, negative interest rates also incentivize borrowing. I brought up the example of Denmark, I believe, where if you take out a mortgage in Denmark or in Europe right now, you actually get paid by the bank every month to have a mortgage. So that's how the loans and the savings work in that environment. So the U.S. getting close to zero rates right now is significant. Once we go negative, I have a feeling that, we'll be entering this entirely new system, and it won't be long before, banks start to go insolvent, because their business model at the end of the day will start to change. Banks used to make money off you depositing money in a bank, and then they give out loans, and then they collect interest on that loan. But now in negative interest rate territory, the only way the banks make money is if they're taking money from you by keeping your money there. And that won't last very long, because people will just turn to Bitcoin and gold and alternatives and everything. So this was an important update yesterday. All right. And, we'll quickly kind of go into the Bitcoin market. So again, I don't have to really tell you guys much. It was a bloodbath. I was up until probably about 10:30 last night, watching it drop all the way down to 3,800. I did have the opportunity to kind of do a couple swing trades and benefit from that. Again, if you're going to have exposure to Bitcoin, which I think you do, download the Robinhood app. Understand that right now we're everywhere. We're in shallow waters, deep waters right now, right? So buy a couple bucks at a time. Don't put as much. Don't put, and whatever you're willing to lose, that's what you got to actually play around with this stuff. But if you're looking to purchase some cheap Bitcoin right now, this is exactly where we're at, and it's a good buying opportunity. All right. Okay, so one thing I did want to actually note, because again, the media is kind of portraying this market crash to just be because of the coronavirus. And if you do watch that YouTube video that I posted last week, you can find it in the comments. I kind of elaborate on the history of where the markets are right now. It's important that you know that, yes, the coronavirus was the catalyst. Yes, the coronavirus was the pin, but it was to a larger bubble that was already forming. When I went through college in 2013, right, most of my studies was on learning about what caused the financial crisis, the housing crisis of 07 and 08, and how can you prevent it going forward? Well, unfortunately, the same people that caused the 07, 08 crisis caused this crisis as well. Businesses and banks have benefited from 10 plus years of near zero interest rate on loans, and also quantitative easing by the Fed. So what I told you the Fed is doing right now by putting $1.4 trillion into the money supply, the Fed printed, and you'll see the charts in that video, after the 07 crisis, they printed quite a bit of money. I believe it was, it was 7 trillion, I believe 7 trillion plus. I'll get the numbers and the true figures in front of you, and you can just look this up on Google if you want. But what has happened since 2007, 2008 is banks and businesses have been able to take loans out at 0% interest rate or near zero. And they've had all that free money. They take out a loan at 0%, which is that doesn't cost any. That's free money. It doesn't you don't have to pay back interest on a loan. So that's free money. And then what the hope was by the US government and the Fed is that the businesses would take this money. It would help stimulate the economy because businesses would have extra income. They could push that money down to employees and salaries would raise, and then people would start spending again, and then it would help stimulate the economy. That did not happen. What we've learned now, especially over the last 3 years, is that banks and businesses, primarily CEOs and large executives, have been borrowing money at 0% interest rate, and they've been taking that money and they've been doing what's called share buybacks. So what a share buyback means, and this was illegal up until a few years ago, is that they would take the free money, and if they're listed on the stock market, there's only so many shares that they have on the stock market for people to purchase. So Apple, for example, Apple has so many shares in the market, and you can invest and buy those shares through your Robinhood app. What the company will do is they'll actually purchase shares back from the market. And what this does is it manipulates the stock price, because when you remove shares from the market, your share price will increase, because it's just the way the math works, right? If you had one share out of 100, it's worth 1/100th. But if you add another 100 shares on that, it gets diluted, right? So it's worth less. And that's the same thing. If you took away 10 shares and now it's 90, you have 1 out of 90, it's worth more. This was illegal for a long time because manipulation of your stock price is not ethical. It's not legal. But a few years ago, we had banking deregulation that happened, which has allowed this. So these executives have been purchasing shares back from the market, which has been artificially boosting their share price. And that's why you've seen such a large growth in the stock market. It's artificial. This is not real. Worst out of it is that a lot of these executives that have been doing this every quarter for the last couple of years, they've been issuing themselves incentive shares. So you've had CEOs that have been borrowing money at or near zero interest rate, buying back shares off the market, boosting up the share, boosting up their stock price. Then in the background, they'll issue themselves more shares and more bonuses, and then they'll sell it. And then it's just continuing. They're continuing to have a higher share price. They're giving themselves more shares, and then they're selling it at a higher price. this also explains why we're seeing the wealth gap as bad as we've seen it now, is because, the 1% has been able to take advantage over the last 10 plus years and profit off of all the free money that's been printed from the Federal Reserve, and has left us as the working class, the bottom 90% of America, completely hung out to dry. So when the coronavirus came around and it put that pin right in the, it was the pin right for the bubble, it's really exploding a larger corporate debt crisis that's going on right now. And it's not ironic. You'll see also a chart in the video that I play there that over the last couple months, we've had the highest amount of CEOs that have left their jobs ever in history. And I look at that as a complete cop-out. That's exactly what that is. They benefited off the last 10 plus years. Now that the market's crashing, they knew it was happening. They've all left their jobs. So this is why I'm here. This is why I'm reporting a lot of this information in financial news, because this is not stuff you're going to hear on CNBC. This is not stuff you're going to hear on Fox. I'm very passionate in this because, I'm one of you. And, when I decided to join the military years ago, it was really, to defend freedom and to fight against what was wrong and blah, 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 blah. And we can get into a lot of other discussions, but this is wrong what's been going on. So what I'll continue to do is I'll post whatever updates I can on the markets, on the economy. I've been doing this as it is for quite a while now. You can follow an account called The Nonconformist that I have with another partner of mine, an Army buddy, thenonconformist.substack.com. I have the Bitcoin adoption page, adoption with a B.substack.com, that you can follow and learn about Bitcoin. And my goal is to really just provide raw, real information to you from what I see and what I believe. And so where are we going forward? I don't think the bloodbath's over. I've had a lot of people ask me if right now is a good time to purchase stock. Even though right now, we're seeing 938, so the market's just open. The Dow's up 1,100 points, 5%. Don't necessarily let these swings up kind of fool you, because this is kind of how it'll work. I personally think that we're in for a little bit more hurt. Again, a normal recession, which you'll watch the news and they're saying we're going there, markets will drop 40%. But I think because of the broader issues we have with corporate debt and businesses not being able to pay off that debt, and employees getting ready to stay home in the U.S., and even now schools just now shutting down in the U.S., we're not going to see the full extent of the economic slowdowns for weeks to come. So, if you're looking to invest, in my personal opinion, and what I do is, I'm kind of holding off right now, because we need to see the extent of the cases that come out in the U.S., and then that will lead us to know, how many people are going to be staying home from work. And if a lot of people are going to be staying home from work, that means that a lot of businesses are going to be hurting. And if a lot of businesses are going to be hurting, their share price is probably going to be effective. So going back to Shahan's comment, maybe you look into how to, actually place a put option and everything. I've even heard from my buddies that are connected into a lot of pension accounts, pension funds, that the actual the markets were thinking about actually shutting down put options for a little bit, because they want to try to stop and slow down what's going on here. But that's really about it, guys. If you've got any other questions, leave them in the comment. I'll try to get another video up at some point to answer them. Hold tight, buckle up. Everyone's, we're all in this together at the end of the day. Just try to prepare yourself, prepare the family. If you could have some cash, have some cash. Now we're seeing, just try to have a little bit of groceries. This way you don't have to go out to the store and, maybe get infected with this disease. But, there's not really a need to panic. If you can, diversify a little bit into bonds. I'm a big fan of the metals again. I definitely see gold doing well through this next couple month period here. And then download the Cash App, buy a couple dollars worth of Bitcoin at a time. I don't think that really hurts at all. But until next time, I will talk to you guys soon. Take care.